Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. So this video is for your September 2025 GST amendments which you have been asking for a long time, and I know it has been little bit late, but still very few amendments. Hardly you are going to see a 45 minutes video around, so covering all the amendments in a very easy way. And of course all the amendments are just 8 pages with so much of decoration, all these things, trying to put them in a very beautiful and like pleasing manner. By doing all that also, I have made this amendments PDF just in 8 pages. So the amendments, before watching it, first download this PDF from my Telegram channel. The link is given below in the description, and take the printout of that amendments, and then please start watching this video so that whatever the notes you want to write, you can write it. If possible, take color Xerox also, because just hardly 8 pages, that means 8 sides only you are going to spend, like for that 4 papers what you are going to take print. So after taking the print, watch the amendments. So definitely you'll enjoy this. So thank you so much. If you look at the first amendment here, actually, see, this is regarding, we have actually inserted two new things in Schedule 3, that is para 9 and 10. So, Schedule 3 is nothing but neither supply of good nor supply of service, right? So, in Schedule 3, now, if you see, the new para says, the services provided by co-insurer to the lead insurer. So, whatever the premium charged by the co-insurer from the lead insurer is neither supply of good nor supply of service. That means there is no GST applicable on this. So, what do you mean by this? See, first of all, understand. I'll take an example and explain to you. See, any like huge insurance projects, whatever as they are there, for example, Airport Authority of India, that they are taking insurance on their new terminal building for 2000 crores. Because of the amount involved here, see, first insurance is given to this Airport Authority of India by New India Assurance Company Limited. So they are giving the insurance. So 2000 crore premium. Okay, so 2000 crore premium they are taking. Now, please understand. You understand 2000 crore premium, na? Mm, so, how much will be the insured value? Okay, now in this, New India Assurance Company Limited is thinking, we cannot take up so much risk, or we cannot give total insurance for this particular project. This is too huge. So, two, three insurance companies together, let us do this like that. New India Assurance Company is thinking. So, this is not informed to Airport Authority of India. So, what New India Assurance Company Limited is doing, along with ICICI Lombard and HDFC Ergo, sir, what it is doing, it is saying that all three of us, let us take this insurance policy. So 2000 crore premium, no, 50% I will take the risk and premium, 30% you take, 20% you take, like that they are dividing. Now understand, on this 2000 crores, sorry, this 2000 crore is not the premium, 2000 crore is the project value. So premium is 0.5% of that sum insured. So what is 0.5% on that, sir? 0.5% is 8 crore rupees. This is the premium. So on this 8 crore rupees, 18% GST, if you see, 18% GST is nothing but 1.44 crore. Okay. So this 1.44 crore GST liability, this will be fully paid by New India Assurance Company Limited to GST department. Now the problem is not that. Now out of this 8 crore, see, 50% only will be with New India. That means 4 crores with New India. So New India will take 4 crore premium, and 30%, that is 2 crore 40 lakhs. ICICI Lombard will take 20%, is nothing but 1 crore 60 lakhs. That HDFC Ergo will take. See, already 8 crore is collected and GST collected 1.44 crores by New India. If New India is paying this entire GST amount to GST department, again on this 2 crore 40 lakhs, 1 crore 60 lakhs, ICICI Lombard and HDFC Ergo need not pay GST. Okay, that means I'll tell you now the concept is, when any insured person is paying premium plus GST to the lead insurer, okay, and lead insurer is paying that entire GST amount to the department. Now the lead insurance is sharing the premium partner to his co-insurance companies, the co-insurers. On that premium, whatever he is sharing to the co-insurers, they need not pay GST. But what is the condition? That is called neither supply of good nor supply of service. So the co-insurer taking part in this particular insurance and taking his premium share is not subjected to GST. It is neither SOG nor SOS. But what is the condition? The condition is the lead insurer has paid full premium, GST on full premium. Then this is neither SOC nor SOS, neither supply of good nor supply of service. Hope you are clear with this example, all that. Okay, right. So this is the amendment with respect to co-insurance. I repeat, co-insurance, simple. Co-insurance means two or more insurance companies coming together and giving one insurance policy. That is co-insurance. Next, we will see reinsurance, that is different from co-insurance. Okay, so co-insurance means two or more people coming together and giving insurance and sharing the premium. So first fellow, who is the face, that lead insurer, is paying GST on full premium. So when he is giving share to that respective insurance companies, that is nothing but neither supply of good nor supply of services. Again, these people need not pay GST on that. Okay, that is what the amendment. So just now we have seen co-insurance. Now we are going to see a concept of reinsurance. First of all, understand, sir, the difference between co-insurance and reinsurance. What is the difference between co-insurance and reinsurance? Co-insurance, what it says, co-insurance is two or more insurance companies coming together and giving the insurance. But reinsurance, what happens now? See now, for example, I am an insurance company. Okay, Vivard Insurance Limited. Okay, keep it that way. So I am giving insurance policy. So I am giving insurance policy, some 10,000 crore worth insurance policies I give. And later on, I am thinking, this much risk I cannot take. So let me just take insurance on this again. So out of 10,000 crore, let us assume some 4,000 crores, 40% I am taking reinsurance to just what I am ceding my risk. That means I am passing on the risk to some other person. Okay, some other insurance company. So I am taking insurance from another insurance company. So this is called reinsurance. So in this, what happens now? Please understand. I will just show you the situation. Client will pay me premium plus GST. Okay. So now what I will do, sir, when client is paying me premium plus GST, some portion of it, as I told you, 10,000 crore worth, I have taken policies. So in that, some part of it, some portion of it, I am giving the risk to some other person. So what I am doing, I am telling the insurer, sorry, I am the insurer. I am telling, the reinsurer, you take this risk. Okay, I'll give you the premium plus GST, all that. But when I'm giving this premium plus GST to you, please understand, I need some commission in that. I need some commission in that because I'm only bringing client to you. So I'm telling to the insurance fellow, I'm only bringing client to you. So on that, even I want some commission. So what I will do now, I will give him premium fully. Whatever I have collected from the client, I will give the premium. But on that premium, he will pay GST. There is no doubt about that. That is also clear. But sir, what is happening now? On that premium when I'm giving, he should also pay me some commission. So that is called seeding commission. Okay. So on that seeding commission, we are saying that I will deduct the seeding commission and will pay to the reinsurer. On that seeding commission, there is no GST. Understand carefully. I collect premium and I give the same premium to the reinsurer also. We are paying GST on the premiums, no doubt about that. But sir, when I am giving the premium to him, I am giving business to him. Please understand, to the reinsurance company, I am giving business. So because I am giving business, he should give me commission. That commission is called seeding commission, right? So on that seeding commission, nobody needs to pay GST. When the reinsurer has paid full GST on the seeding premium, so whatever the premium I am giving to him, on that full he is paying GST. Then again on seeding commission, we need not pay GST. It is neither sauce nor sauce. So don't worry, I have an example here. I'll explain through an example. See, ABC Life Insurance Company Limited, registered in Maharashtra, taken out reinsurance for one of its large group term insurance policies. Total premium collected is 120 crores. Portion ceded to reinsurers. For some reinsurance companies, we have ceded 40% of the premium collected. That means 40% of the premium collected, you only take and you only take that risk also. Like that, we are ceding it. Okay. Now, ceding commission agreed is 15% of the premium ceded. GST rate applicable is 18%. The reinsurance arrangement does not relate to any government notified reinsurance. That means it is not exempt under all that stuff. So now, for example, here if you see, first, I have collected total, that is ABC Life Insurance collected total 120 crores. Out of this 120 crores, 40% premium collected is ceded, correct? So 40% premium is what in this 48 crores. So if you see, gross premium ceded to reinsurer will be 48 crores. What is the commission on this? Commission on this, as we have discussed, 15%. 48 crores into 15%, how much? 7.2 crores. So 7 crore 20 lakhs is the commission which ABC should get. Okay. So what we have to do now? See, understand, ABC is the insurer. Next, GIC is the reinsurer. Okay. Now, sir, what happens is ABC should pay 48 lakhs, sorry, 4 crore, 48 crores, sorry, 48 crores plus GST. Okay. Now, what GIC should do? GIC should pay 7 crore 20 lakhs as commission. On this 7 crore 20 lakhs, no GST provided, sir, GIC pays GST on entire 48 crores. Are you understanding the point? So what we are trying to tell here is, sir, insurance companies will take reinsurance, so they will part with their risk, so they will cede that risk, and so because they are giving business to reinsurance companies, sir, they will also in return take commission from the reinsurance company, that we call as ceding commission. So when paying this 48 crore plus GST, ABC what they will do? Their 7 crore 20 lakhs commission they will deduct and pay balance. That means he will pay 41 crore 80 lakhs plus GST on 48 crores. Are you understanding the point? GST on 48 crores. So GIC will pay GST on 48 crores and close this. ABC need not pay GST on 7 crore 20 lakhs because this is neither supply of good nor supply of service. Okay. So hope this is clear to you. I'll again explain to you. See, understand. Client pays premium to insurance companies, and now insurance companies what they will do? Sir, insurance companies they will later on they may feel okay, let us take some reinsurance, this much risk we cannot handle, so they will take again insurance. So they will say, the client has given me so much of premium, in this much portion I am ceding with you, so you take this much premium. Client gave 100 crores, now we are seeing 120 crores here, you take 40%, that means 48 crore premium you only take, and 40% risk also you only take. I don't want, but I am giving business to you also, so give me commission, like that I am asking. When I'm asking that commission, sir, they are giving the commission. So instead of they giving the commission, I should give them the portion of the premium amount that I am paying, and I'm deducting my commission and giving to them. That commission what I'm having as a ceding commission, on that there is no GST, provided opposite reinsurance company has paid GST on full premium what they are taking. Okay, so here as I told example, 48 crore premium I should give to them, but I will deduct my 7 crore 20 lakhs commission. On that 7 crore 20 lakh commission, GST will not be applicable. It is neither SOG nor SOS, provided whatever the premium I am paying to them, reinsurance premium, that 40 crores is there, no, on that entire 48 crores, they are paying GST. That is the condition. Okay. Now, we understand the basic differences between co-insurance and reinsurance. Co-insurance, at the time of issuing insurance policy, we already, the co-insurance have the agreement, we are agreeing to take this policy. Okay, or give this policy to the client. Client may not know that, that's a different story, but we know it. So we all together we are sharing it like that. But in case of reinsurance, at the time of me issuing the insurance policy, I am alone. I am giving the insurance policy. Later on, I thought this is going to be too risky, so that I am ceding it with some other fellow, sharing it with some other fellow. That time I am taking reinsurance commission. Okay, that is called ceding commission. On that GST is not applicable. Okay, that is the difference between the previous entry we have in schedule 3 and this entry. Hope it is clear for you. Okay, so this is the notes. If you see the next amendment, actually, the next amendment is regarding, there is an amendment in charging section 9 subsection 1. So what they are doing in section 9 subsection 1, charging section, sir, in charging section they have given all goods or services except alcoholic liquor for human consumption is subjected to GST. That means alcoholic liquor for human consumption is not subjected to GST. There is no power to charge GST on alcoholic liquor for human consumption. Now what we are doing now, sir, you gave relaxation for alcoholic liquor from GST. That means, of course, states will charge different taxes on alcoholic liquor. But there is some raw material to manufacture alcoholic liquor, sir. There is undenatured extra neutral alcohol, or you call it as rectified spirit, whatever it is. It is just like a raw material to manufacture the alcohol. Sir, on alcohol there is no GST, but on the raw material there was GST. So what they did, so they have brought this raw material also inside this. So they said, on raw material also there is no GST, on final output also there is no GST. So you can now happily consume liquor without GST, is what full and full they are trying to tell there. So undenatured extra neutral alcohol or rectified spirit, these are now removed from the charging section, so you cannot levy GST on that also. So alcoholic liquor final product also no GST, the raw material used also no GST. Not every raw material, only this undenatured extra neutral alcohol. Look at the technical name. Okay, this is also now removed from the charging section. Next amendment, if you see, regarding sponsorship services in RCM. RCM, you know, sponsorship services, any person providing sponsorship services to any person who is a body corporate or a partnership firm, it is coming under RCM. That means supplier can be any person, recipient should be body corporate or a partnership. Now they have amended the condition in such a way, supplier should be any person other than a body corporate. That means if the supplier is body corporate, automatically FCM. Okay, I'll just show you a small example here, small notes. Look at this. You know, supplier is a body corporate, recipient is a body corporate or a partnership firm. Then what is it, RCM or FCM? You tell me. You just comment the answers in the chat box here before me discussing the answers. Just pause the video and do it. Pause the video and do it. Right. So you know, sir, supplier is body corporate. Now in this both cases, automatically FCM, sir. No matter what, who is the recipient. Straight away, because other than body corporate. So straight away what? FCM. Next, if you see, supplier is non-body corporate, recipient is body corporate or partnership firm. So all the conditions are satisfied. You know the conditions are what? Supplier should be non-body corporate, recipient should be body corporate or a partnership firm. So then only RCM. Next case, if you see, supplier is non-body corporate, condition is satisfied, but recipient is others, not a body corporate, not a partnership firm, then automatically that is FCM. That means to bring RCM into picture for sponsorship services, understand supplier should be definitely a body corporate, recipient should be supplier should be any person other than a body corporate. Sorry. Supplier should be any person other than a body corporate, recipient should be body corporate or a partnership firm. So only in this case RCM will come into picture. Remaining all cases it is FCM. And one more small point is, you know, sponsorship services means the sponsor is the recipient, not the supplier. The person who is giving sponsor is the recipient. We are going to advertise his name, advertise his brand. That is what sponsorship service is all about. So please be careful with that. Okay, that is the another entry. So RCM amendment. If you see the next one, again another amendment in RCM entry only with respect to renting of commercial properties. Okay, sir, with respect to renting of commercial property, you know, renting of commercial property is taxable only. But if the supplier is unregistered person, recipient is registered person. Recipient is registered person other than who has opted for composition scheme. Earlier, this other than who has opted for composition scheme was not there. Now through amendment they have added this. So what is the impact of this if you ask me? I will show you again here. See, renting of commercial property. Supplier should be unregistered person, recipient should be registered person not opting composition scheme, then only RCM. Remaining all cases FCM. So you just pause the video and see what is this and comment the answers in the video, like give me in the comment box. Pause the video and you try. Okay, so here first case is satisfying the condition. Supplier is unregistered person, recipient is registered person. So this is RCM. But remaining cases, if you see, supplier is unregistered person but recipient has opted for CS, means composition scheme. That means FCM only will come. Remaining all cases FCM, FCM. Correct? Registered person straight away FCM. So if you see in these two cases, second case and third case, you will get a doubt. Sir, if supplier is unregistered person, you are saying FCM, who will pay GST? Nobody will pay GST. Okay, that means it is taxable, but there is no person who is there to collect that and give to the government. Okay, it is just like drinking tea is taxable, but if you are drinking tea in a hi-fi restaurant, but if you are drinking tea in a roadside restaurant, roadside tea stall, sir, it is taxable, but there is no person to collect GST and give to the department. So this second case and third case is like drinking tea in a roadside tea stall. Okay, first case, of course, roadside tea stall only, but a registered person is going and drinking, so RCM. So fourth case is like drinking tea in Taj Hotel. Okay, so that is what the point. Hope it is clear for you. Very simple amendment. Please be very careful. Good chances of being tested as an amendment or like adjustment in the problem or a separate case study based question also. The next amendment is nothing but a clarification, my dear friends. The clarification is regarding whether Delhi Development Authority is treated as a local authority. So why this doubt has come into picture? Now, please understand, in RCM we have seen, sir, any local authority providing services to a business entity are taxable under RCM. Okay, if at all it is a taxable one, it is taxable under reverse charge basis. Now, sir, Delhi Development Authority, is it a local authority? So that the services provided by Delhi Development Authority to business entities, whether it comes under RCM was the doubt. Then the department has clarified, sir, local authority definition as per section 269, it is not meeting the requirement. So Delhi Development Authority DDA cannot be called as a local authority, sir. Hence, the services provided by DDA are not covered under RCM. That's all. Only lengthy points. That's all. But apart from that, concept is very simple. Delhi Development Authority is not a local authority. Services provided by them to business entities are not subjected to RCM. That means, hence, what it is FCM only. So that is what the point. Okay, this is the clarification. So the next amendment is regarding some clarification with respect to place of supply for online services supplied to unregistered recipients. Here the problem arising is, please understand, mainly for any services which are supplied through online, through e-commerce operators, etc., or OIDR services or online money gaming. That means, see, for example, any services like AstroTalk or online consultancy or OIDR services, means you can take Netflix example, or online money gaming, you can take Dream 11, Rummy Circle, etc. So for these type of people, you can understand the nature of services they are providing, because they are providing the services using technology to people living across various states, all that stuff. When they are doing their billing, what is happening is, in their bills, in their invoices, they are not recording the name of the state from which the customer is coming from. Because of this, what is happening now, sir, we are not able to determine the place of supply properly, and we are not able to share the revenue to those respective states properly. So now what has happened now? The department has clarified, as per section 12 subsection 2, if you see, any services supplied to an unregistered person, the place of supply shall be, if at all you have his address, the recipient address in your records, that address itself will be the place of supply. If you don't have his address in the records, then your address, that is the supplier address, will be the place of supply. Now what the department has clarified now, if you are providing any services through e-commerce operator, this online or digital services, or any OIDR services like online information data access and retrieval services, okay, and online money gaming services, these people, what you have to do now, it is mandatory for you. What is it mandatory for you now? To take the address of the recipient. Address of the recipient is not door number, all these things required. At least make sure you are taking the name of his state. Okay, so the state name is mandatory. So for you, take the state name of the recipient. That is what? Mandatory. That is mandatory for you. Okay, so this itself will become what? The place of supply, and that you have to file when you are filing your GSTR 1 or 1A, as the case may be. Give the details of place of supply of your recipients and pay the taxes accordingly. So I repeat, place of supply will be the name of the state recorded in the invoice. For the customers who are unregistered under GST, for them, if you are providing online digital services either through e-commerce operator, etc., or you are providing OIDR services where it is purely technology driven, online information data access and retrieval services, or even online money gaming like Dream 11, all these things, if these people are providing services to, and you can understand, these people are providing services across India to various people unregistered under GST. Okay, so now for these services, they are supposed to record the name of the state of the customer in their invoice, so that place of supply we will determine accordingly and will give share to the respective states. So simple, these people record the address of the recipient in the invoice, mandatory, no matter what is the value of supply. That is very important, sir. Irrespective of the value, it is like more than 50,000 only I am supposed to record all these things. No, not for you, sir. For you, no matter what is the value, even Netflix 149 rupees subscription per month we are paying, no, on that also the invoice, the name of the state should be recorded. Okay, and that should be filed in GSTR 1 and 1A, as the case may be. Okay, that is what the clarification given by the department here. Next, if you see, the amendments are in exemptions. Exemptions, not that major amendments, nothing to worry. See, entry 25A and entry 16A, small change in that. So nothing but, supply of services by providing metering equipments on rent, testing the meters or transformers or capacities, all these things are provided by this electricity distribution utilities. So they said provided by electricity transmission, instead of and, they have made the word or, distribution utilities to their consumers. Okay, instead of just using the words and, here they are using the word or. Okay, that is the only difference. Apart from that, nothing else. So a small change there. Because I have to show the change that I have given here in the amendments. Apart from that, a very small change. So this is nothing but services provided by electricity transmission or distribution utilities to their consumers. What type of services they are providing, sir? They are providing metering equipments on rent, or they are providing testing for meters or transformers or capacitors, or releasing the electricity connection, or shifting the meters or service lines, or issuing the duplicate bills. All these things are what? Nothing but incidental services these electricity transmission or distribution utilities will do to their customers. So earlier they were using the word and, now they have made it or. That's all. Apart from that, nothing major change. So nothing to worry. And one more thing, if you see entry number 69 here also, sir, earlier the services provided by National Skill Development Corporation NSDC or National Skill Vocational Educational Training NCVET NSDC. Sir, these people providing the training, all these things, sir, this were already the previous entries, The new word added here, the new line added here. Sorry, a training partner approved by NSDC in relation to National Skill Development Program or other schemes implemented by National Skill Development Corporation NSD or vocational skill development courses, all these things. That means training partner, simple, training partner approved by NSDC providing the services of training, okay, is exempt under GST. Only this one is the newly added one line. Apart from that, the entry remains the same. And one more thing, new exemption is there, entry 36B. So what is this entry 36B? If you see, so the next one, if you see the clarification regarding this, what is this clarification all about? Now, this is all about, sir, Municipal Corporation of Delhi. Municipal Corporation of Delhi, what it is doing? Now, it is receiving various services such as housekeeping, civil maintenance, furniture maintenance, and horticulture from Facility Management Agency. Now, the point is, sir, there is something called entry 3A in exemptions, which says any person providing services which are entrusted to panchayat or municipalities under Article 243G or 243W, provided to central government, state government, union territory, local authority, or government department, it is exempt under GST. Any person providing services entrusted to panchayat municipality under 243W, 243G to government or governmental authority, government department, local authority, all that exempt under GST. Now the doubt is, can this Municipal Corporation of Delhi can claim this exemption? Was the doubt. Can claim exemption of the services provided by this facility management agency? Was the doubt. Understand, this Municipal Corporation of Delhi is taking the services of housekeeping, civil maintenance, furniture maintenance, horticulture, all these things. These services are not something which are entrusted to municipality or panchayats. They will not come under entry 3A. So it is very much taxable. That is what the clarification here. So the services provided by this facility management, such as housekeeping, civil maintenance, furniture maintenance, all are not supplied in relation to performing any functions entrusted to municipality. Okay. So they cannot claim exemption under entry 3A. So they are very much taxable under GST. That is what the clarification. Now, if you see the next one interesting amendment in section 13 subsection 3. So what is section 13 subsection 3, sir? Time of supply for services covered under RCM. So TOS for services, TOS for SOS covered under RCM. Okay, time of supply for services covered under RCM. Generally time of supply for services covered under RCM are nothing but date of payment next 61st day from the actual date of invoice, not due date, actual date of invoice. So date of payment means maybe entry in the books of the recipient or debit in the books of the bank account of the recipient, as the case may be. So this was the time of supply before. Now what the department has did now, see, understand, you are comparing 61st day from the actual date of invoice, okay, but if invoice is issued by the supplier, that is the case. But in case of reverse charge mechanism, there is a concept of self invoice also, where supplier is unregistered, recipient has to generate invoice on himself. Self invoice concept we have seen. So now what is the concept here now? Sir, supplier is issuing the invoice, na, no problem, sir, this time of supply is useful. But there was a scenario where, sir, supplier is unregistered and recipient has to raise invoice on his own, then what will be the time of supply? So the section 13 subsection 3 was not addressing this. Please understand, I repeat, this amendment is only in section 13 subsection 3, but not in section 12 subsection 3. So 12 subsection 3, you know, time of supply for goods covered under RCM. So time of supply for goods covered under RCM is nothing but what? Date of receipt of goods, date of payment, or 31st day from actual date of invoice. But 13 subsection 3 alone got amended. 12 subsection 3, they did not touch anything regarding this. So 13 subsection 3 says what is time of supply means date of payment 61st day from the actual date of invoice. That is very important. Actual date of invoice if the invoice is raised by the supplier. No sir, supplier did not raise the invoice. Then you don't take this one, take date of payment and actual date of issue of invoice. Date of issuance of invoice means we are talking about the actual date of issuance of invoice, whichever is earlier. If the invoice is to be issued by the supplier, 61st day you will compare from the actual date of invoice. But if the invoice is raised by the recipient, you will take actual date of invoice itself. That will be the time of supply. Okay, so date of payment, if invoice is raised by the supplier, time of supply will be 61st day from the actual date of invoice, whichever is earlier. No sir, if the invoice is raised by the recipient, date of payment and actual date of invoice of the recipient when the invoice has been raised by the recipient, whichever is earlier. So if it is FCM, you will compare, sorry, if it is supplier raised the invoice, you will compare point 1 and 2. If the invoice is raised by the recipient, you will compare point 1 and 3, whichever is earlier. Okay, hope it is clear. I repeat again, section 13 subsection 3 alone got amended. Section 12 subsection 3 doesn't have any such amendment. So 13 subsection 3 says, sir, invoice is raised by the recipient. Now time of supply is simple. Invoice is raised by the supplier. What is the time of supply? Time of supply will be date of payment or 61st day from actual date of invoice, whichever is earlier. No sir, invoice is raised by the recipient himself. So recipient himself. Then what is the time of supply? The time of supply will be date of payment or actual date of invoice by recipient, whichever is earlier. Simple. So this will be the time of supply. Okay, hope it is clear for you. Please be careful with this. Okay, so this is one interesting amendment here. And yes, anything else in this I just wanted to discuss? So no, that's all. So this is what the simplified version of that section 13 subsection 3. Hope it is clear for you. So this is what the amendment in 13 subsection 3, time of supply. The next amendment, your favorite section, section 17 subsection 5, blocked credits, blocked credits. So 17 subsection 5, blocked credits, no major amendment, please understand. And here what they are saying now, if you remember section 17 subsection 5 earlier, they were saying if you are paying taxes under section 74, 129, 130, the ITC is blocked. Now they have removed the sections 129 and 130 and they kept only section 74. That means whatever the tax you have paid in under section 74 alone is blocked. That means 129 and 130, section 129 and 130 will be eligible for ITC. For CA inter students, these sections are not there for you, so nothing to worry. CA final students only we have to focus here. So section 74, whatever you have paid GST, and section 74, you know, it is available only till the financial year 23-24. So from 24-25 there is section 74A. So ITC is blocked only for section 129 and 130. So sorry, ITC is available for section 129 and 130. It is blocked only for section 74. That means I can also say indirectly, so section 74A also you can claim ITC. So we have to see whether they will make any amendment on this or not. I repeat, for CA inter students this is not applicable, only this is for CA final students, right? So ITC of GST paid on section 129 and 130, so confiscation of goods, all these things, detention of vehicles is available as ITC for you under section 17 subsection 5 now. So no problem, transport the goods, do the offenses, pay GST and take it as ITC. But penalty and all you cannot take ITC, remember that. Now one interesting clarification in ITC chapter actually. So your friends or anybody would have struggled it to understand, or you would people would have explained it in a very like what complicated way. All that very simple one, just looks like little bit lengthy one. Apart from that, very easy one, please understand that. What is this concept? Now see, I'll explain this with my artistic skills here. Okay, the original equipment manufacturer, this is mainly with respect to cars. There was a doubt. See, for example, there is a factory which is manufacturing cars, and there are dealers, who are selling the cars or any goods you take. I repeat, this clarification is equally applicable for all the goods. Okay, what is this concept now? See, there is original equipment manufacturer factory. Near the factory they are manufacturing all these things, and at the factory gate itself, what the dealer will do, dealer will go to the factory gate and take the delivery of the goods whatever he is buying from the original equipment manufacturer. So the delivery is happening, the delivery of these goods is happening at the factory gate of the original equipment manufacturer. So dealer will go there and take the delivery. So what happens, sometimes dealer itself, he will go take his vehicles and take the goods, or dealer will ask, sir, original equipment manufacturer, you only arrange some vehicles and we will take care of the cost, we will take care of the insurance, whatever it is, or if you are paying also, no problem, we will reimburse to you. Like that they will discuss. So here the point is, as per the contract, if you see, we call this as X works contracts. X works contract. Okay, so that means your X will not work here. So X works contracts now, sir, where the dealer will own the goods at the original equipment manufacturer's factory gate itself. So the goods are handed over to the transporter, and the OEM, the original equipment manufacturer, completes the delivery at the factory gate. At the factory gate itself, original equipment manufacturer is like, what? Okay, fine, my responsibility is over. Like that, he is leaving. Okay, so in that case, please understand, sir, the original equipment manufacturer responsibility is ending at the factory gate. In that situation, dealer is getting these goods, right? Now the doubt is, sir, dealer is getting the entire risk at the factory gate only. Still, this goods has to travel from original equipment manufacturer factory gate to dealer's showroom or dealer's business premises, all these things. That means dealer has not yet taken physical delivery of the goods, sir. But in section 16 subsection 2, conditions for availing ITC, there is a condition that you can avail ITC only if you have actually physically received the goods. Then only you can take ITC, correct? So do you remember that only after the actual receipt of goods or services you can take ITC? Here, sir, I got the ownership, actual ownership at the factory gate, sir. But goods are still in transit, goods are still coming to my place, the vehicles are still coming to my place, or goods are coming to my place. They are still in transit, sir. I have not physically received them. Can I take ITC? Is the point of the dealer. Now the department has observed this situation closely and told, hey, here at the factory gate itself, you are getting the ownership, you are getting total risk. So we will give you ITC then and there itself. Don't worry. That means even though the goods are not physically received by the dealer, we are seeing he is getting the risk and ownership, everything at factory gate. So we will give ITC, no problem. If you ask me, then the condition in section 16 subsection 2 itself will lose the relevance, actually speaking. So in all the cases, then people start will making X works contract agreement, all these things. Okay, so the moment the goods are sold, the invoice is raised, payment is made, whatever it is, the ownership risk, everything is passed at factory gate. So even though the goods are not physically received by me at my premises, I can take ITC. Okay, so now dealers are enjoying. Yes, super sir, nice clarification, like that. And this clarification is equally applicable. This clarification, this same principle is equally applicable to other goods also. But point is, you should bring the goods for business purpose. If you are diverting it for non-business purpose, or in middle the goods are lost or stolen or destroyed, written off, disposed of, section 17 subsection 5 block the credit is there, you cannot take ITC. That is basic thing, sir. Please understand, that is basic clarification. The important thing is, at the factory gate, if you are taking the ownership, straight away they are giving you the ITC. So in 16 subsection 2, sir, the registered person can be considered to have received the said goods at the time of such handing over of the goods by the supplier to the transporter at his factory gate. So it is considered as recipient has received the goods. Even though he has not actually received, it is considered that he has received the goods. Okay, that means received the goods in the sense, technically it need not come to your business premises physically. You are receiving it at a factory gate, it is as good as you have received. That is what they are clarifying. Okay, and this is equally applicable for other goods also. Such a wonderful clarification. Okay, for people like dealing with these type of goods, where they are buying the goods on X factory basis, or you can say X works contract. Okay, in that way, right? So a nice clarification. If you see the next amendment, that is a new proviso has been added below section 30 subsection 2, that is revocation of cancellation. See, what is happening is department officers, because you are asking for revocation, so once your registration is cancelled under section 29, especially subsection 2, that is suo motu cancellation by proper officer, you will go and ask the proper officer, sir, revoke my cancellation, sir, please sir, cancel the cancellation order. So when they are revoking the cancellation of registration, they can revoke that subject to such conditions and restrictions as may be prescribed. Like they may put the conditions as we have seen now. Sir, if you are not filing all the pending returns, then the revocation shall be revoked. That means your registration will be again liable for cancellation. I am revoking the cancellation with a condition that you should file all the pending returns. You're not filing the pending returns within the prescribed time, then again they will cancel your registration. So that is what the point. So what they are trying to tell you now, sir, when I am revoking your cancellation, that means when I am cancelling your cancellation order, please understand you should follow the terms and conditions or whatever the conditions and restrictions I have imposed on you. That is what the amendment. So the next amendment is the new rule 47A in rule 47A. Sir, what is this rule 47A? Na? This is linked to the amendment what we have seen in section 13 subsection 3, time of supply for services covered under RCM. So for the time of supply for services covered under RCM, we have seen if the recipient is required to raise the tax invoice, sir, as per 9 subsection 3, 9 subsection 4, who is liable to pay tax under reverse charge mechanism, if that fellow has to raise tax invoice, sorry, where supplier is unregistered. So in the law, there was no time limit for him when he has to raise tax invoice. So now we are bringing a time limit for him also. So if the recipient is required to raise tax invoice, the tax invoice which has been referred in rule 46, if that has to be raised by a person who is liable to pay tax under section 9 subsection 3 or 4, that means if the recipient is supposed to raise the tax invoice, as we have seen in section 13 subsection 3, I repeat, so in such cases he has to raise the tax invoice within a period of 30 days from the date of receipt of the said supply of goods or services. Simple. Recipient, now you are also having a time limit to raise tax invoice, no matter if it is goods or services. For both we have given the time limit. The time limit is, if at all you are a recipient covered under RCM, maybe goods or maybe services. Sir, you are buying something and supplier is unregistered. So you have the responsibility to raise the tax invoice, the self invoice. You raise this within 30 days from the date of receipt of the goods or services. Okay. And please make sure you are raising this invoice. Once this invoice is raised, maybe within 5 days he raised, maybe within 25 days he raised, or whatever it is, that will compare in time of supply, section 13 subsection 3. But what the law says, within 30 days you raise. He says, sir, I will not raise within 30 days. What you will do? You will be subject to a penalty under section 122. Simple. Okay. So time limit to raise tax invoice for any recipient taking goods or services liable to raise tax invoice because supplier is unregistered. 30 days is the deadline. That is the another amendment. So this amendment, I repeat, this is connected to section 13 subsection 3 amendment also. Okay. Right. So this is another amendment. So let us see the next amendment, that is with respect to generation of unique enrollment number. See, generally, when you have to generate e-way bill, sir, you are registered under GST, you are generating e-way bill, fine. But even though you are not registered under GST, you can generate e-way bill. So to facilitate that process, what the law says, for transporters, all this we will be seeing this unique enrollment number, all that concept. Now they are amending this rule 138 sub rule 3 in such a way where not only them, any unregistered person, in section 23, where there is relaxation given to people who are making interstate supply of handicraft goods are obtained, are exempted from obtaining registration, but there is a condition they should generate e-way bill, obtain a PAN card and generate e-way bill every time when they are transporting the goods. So for those people and any other unregistered person who wants to generate e-way bill, they can generate e-way bill by submitting the details electronically in the common portal, and upon the validation of that, they will get unique enrollment number. Okay, using that unique enrollment number, they can happily generate e-way bill even though they are unregistered. Okay, earlier this was with transporters. Now this is extended to these people also. They can do generate e-way bill without even GST registration. For that, what they have to do? They should get unique enrollment number applied through common portal. That is the point. If you see the next one, the payment of tax, no major amendment or whatever it is. Sir, in rule 88B, and not only that, rule 8 in returns chapter also, if you see rule 88C, rule 88D, all these cases, sir, they have just given reference of section 74A. So in those rules, there have been the reference of section 73, 74, 74A. So 73, 74 was there. Now they are adding 74A. So apart from that, no conceptual amendment anything. So for inter students and for final students, both of you, nothing that great conceptual change there to study. Wherever there is section 73 and 74, they have added section 74a, because section 73 and 74 are applicable only till the financial year 23-24. From 24-25, section 74a is only coming into picture. So they have given reference of that in various places, not only here, various places. So no concept, nothing involved, just adding a section number. And this is not relevant for CA inter students at all. This is only for CA final students. Okay, that is what the next one. So we are done with this. Coming to returns chapter, coming to the next one, here if you see, what they are trying to tell is GSTR 7. GSTR 7 is applicable for whom? GSTR 7 is applicable for TDS deductors. For GSTR 7 TDS deductors, what the law is saying, even though you have not made any deductions in the month, please make sure you are filing the nil return. Okay, that is mandatory. So they made nil return mandatory, and you know the due date is 10th of the next month. Okay, so the point is, I repeat, GSTR 7, nothing changes, due date, all these things, late fees filing, all these things are there, but they are now making nil return mandatory. Even though there are no deductions, now you have to file the nil return. That is what the point. So the soft copy used here in this video, and also the amendments soft copy PDF, all these things are available on our PDF Telegram channels. The links are given below in this description of the video. So hope you have enjoyed learning in this. So understand very few amendments for September 25 exams, and even a quick revision video by like 5 minutes. Within 5 minutes, I'll try to make a short video covering all the amendments before your exam to revise easily all the stuff. So that I will do. So please stay updated for that to our YouTube channel also. And if you have liked this video, please make sure you are sharing with this with your friends as well. That is of course. And one thing, please believe, you are preparing very hard, and keep that faith in yourself and work very hard. There is no shortcut for success. Only thing, don't get disappointed or demotivated. There is no shortcut for success. So just believe in yourself, work hard, and enjoy your preparation. That is what very important. See you all in another video. This is your Mr. GST signing off. Jai Hind.